And now we're going to economy, to China. Fears are rising throughout the global markets as trading on China's major indexes was halted for the second time this week amid huge losses. I-24 News correspondent Ayman Siksik has more on the ripple effect.
China stocks plummeted so far Thursday that the losses triggered a market-wide closure. The second time trading was halted in the markets since the beginning of this week. But who's to blame? Aside from allegations that North Korea had successfully detonated a hydrogen bomb, market analysts suggest it is the ineptitude of Chinese officials at the People's Bank of China that sank the Chinese markets.
It does just go to show how juvenile some of the retail investment community of the Chinese equity markets are, and partially how they're still trying to get to grips with this new tool available to the People's Bank of China.
The new tool is the CSI 300, a collection of blue-chip stocks listed in Shanghai and Shenzhen, known as, quote, the circuit breaker. If the CSI falls by 5%, the entire market is suspended for 15 minutes. If the fall extends to 7%, the markets freeze for the rest of the day. But is the circuit breaker truly a protective mechanism? Chinese business owners don't all agree.
And this circuit breaker rule not only did not reduce market fluctuation, actually it exacerbated the market fluctuation.
So how did things get to this point? Some say China is struggling to reconcile a communist regime with a capitalist market. Founded in 1921, the Communist Party of China believes in a capitalist economic system, but under a socialist worldview. This internal contradiction has resulted in dwindling control over currency. Analysts argue the decision to fix the yuan lower against the dollar has made it clear that the central bank would not defend the value of the currency. The big question now is how this will affect global markets.
For a number of years, China's been key, particularly on a global level for all commodities. Also, the same applies to oil.
Though most experts say the impact on global stock markets are as of yet manageable, oil is emerging as a major concern. Specifically, the next potential beneficiary from oil sales all the way across from China in the Middle East.
They're teetering on the brink of Iran being given complete lifting of those sanctions, and therefore the ability for them to fully integrate themselves into the global supply of oil.
Though it has historically remained uninvolved in Middle Eastern tensions, China has recently been making diplomatic moves in the region. At the height of tension between Iran and Saudi Arabia, China has sent an envoy to both countries calling on all sides to, quote, exercise restraint. Restraint is in fact what China is relying on in the current spat between Saudi Arabia and Iran, as it depends on both countries for oil supplies.
And with me here in the studio is Alex Cohen, value creation expert at the Academic College of Tel Aviv. Good evening.
Hi, Lucy.
It's not that bad, right?
What?
The situation is not that bad, right?
No, no.
And I'm a I-24 News correspondent.
Good evening, Lucy.
So, let's start with you, the recent developments on this specific issue, because the entire world is worried about that.
Well, yes, Lucy, I think part of the fear was initially that this would be a recreation of the 2008 financial crisis, which started in the U.S., but as it turns out, this is not where we're going. Even though the Chinese do hold much of their wealth in the housing market, the same as the Americans did back in 2008, the property market in China is not nearly as exposed to the stock market as was in the U.S. in 2008, and the crisis is, of course, in the stock market. Now, China is relying on being still an economic superpower. Everything, if we pick it up in the studio now, was made in China, probably.
Yeah.
So the major concern, and we'll probably talk about that a little later, is for emerging markets outside of China.
I'm seeing that the trade was stopped today,
Yes.
and I am asking myself, is it a fair game, and is it okay that they just stop it because it's decreasing so much?
All stock markets are mousetraps. Okay, the idea is it's very easy to go in, but if the market falls too much, then they stop trading. So if it goes up, everybody's happy. If it falls, they stop trading. But it's funny because he mentioned the real estate bubble in the U.S. There was so much corruption there. So even though we're very critical about China, they did not reach the levels of corruption that we saw in the U.S. in the 2007 or 8, because there you had this real estate bubble which was filled with corruption. I don't understand why people are worried, because, again, if the yuan is weak, this is excellent for Chinese industry because it means that they would be more competitive. You'd be able to buy more for the dollar. It's bad for the stock market because if you put your money into the stock market, not only did you lose on your stocks, but the yuan being weaker, you lost twice. So it's a paradox where the economy goes up and the stock market goes down. And because of this mechanism and the clumsiness with which they're using, because once you understand that at 7%, if the market falls 7%, the door just shuts down. That's what happened 30 minutes after they started commerce. So after the market started falling, people just rushed out just to get their money out. So that's the clumsiness of somebody who doesn't have the experience.
Okay, let's jump to this conversation. Andrew Bush, political economist and editor of a Bush Update newsletter at andrewbush.com. Good evening. Thank you very much for joining me.
Sure, it's my pleasure.
So, Andrew, 30 minutes, just after 30 minutes, 7%, and then they shut down. You know, it seems for me that when you are controlling the situation in one way or another, then maybe you should not be worried that things will deteriorate even further.
Well, I think the problem is that the 7% circuit breaker is way too narrow. In the United States, I think it's around 20%. And what happens is that you shut it down and people freak out. They go, oh my gosh, I can't sell. And as soon as the market opens again, they sell super aggressively because they don't know if they can get out the next time the market opens. So fortunately, the Chinese regulator just today said, hey, we're taking off the circuit breaker. So for tonight, here's what's going to be fun to watch happen in China when it opens. There's going to be a frenzy of selling, and we'll see how far down it goes, and then it should stabilize, and it might even come back a little bit. So just it's really the regulator made a huge error in having too narrow of a band for the circuit breaker to go off.
You know, Andrew, the stock market business economy is a matter of trust. When we are seeing that you cannot trust exactly the Chinese to do the job in the stock market, how can you actually convince them to come back and invest again in your own economy?
Yeah, and I think that's a great point. One of the problems with China is that we just don't know how fast they're growing. You'll see people say it's growing at 6%, 3%, whatever. We don't know because the Chinese do not release the underlying statistics for their economy. So it's a great unknown. That adds to uncertainty. That adds to, belief of investors that they can't trust things that are going on there. So it's really difficult to understand what's happening in China. And that makes me worried about what their stock market's going to do. So their stock market is very different from the United States in so many ways. So try not to project whatever's going on in the Chinese stock market as to what will happen in the United States.
Yeah, so you are not worried that it will affect the United States in, let's say, a really, really bad way?
Well, it's negatively impacting it, certainly. It's creating some uncertainty, but just a couple of numbers. First of all, China is only 7% of our total exports, and exports in the United States are only 14% of the economy. So we're talking about less than 1% of the economy having problems. So try to keep that in perspective. As far as the U.S. economy goes, I still think, Friday we're going to get the unemployment number, and I still think we'll see around 200,000. The Federal Reserve feels very comfortable with what they're doing in raising rates because of the strength of the underlying economy. So all this wraps up, meaning that we'll see a lot of volatility in the first quarter here. China's adding to the uncertainty of it, but overall, the U.S. economy will get through this with no problem.
Yes, Andrew Bush, thank you very much. It was a great pleasure. Thank you very much.
You bet.
No worries. So
No worries.
Why are we going out of our minds because of it? Because it's money?
Well, money is fun. I guess you can buy nice things with it. But this means that you'll be able to buy more things with it, because since most of what we're wearing is made in China, the pen, the suit, etc., so we'll be able to buy more junk.
Where do you think, until, like what we are hearing from Andrew here, is that it will stop eventually?
Yes.
How long should we expect this to go forward?
I believe that once these mechanisms are disabled, people stop panicking. I would believe that within a few days it should stop falling. I would expect it to stop falling, but personally, I'm very happy about that. The problem, think about Russia. People invested in Russia after the Soviet Union broke up, and Russia went crazy. So I think the same thing is going to happen in China. It will take a long time before they understand what capitalism is like.
People are worried about what is happening. Chinese are worried about what is happening in their stock markets, or it's not interesting?
Well, it's really not only the Chinese, because Russia is a great example. Russia and Brazil, these are emerging markets, and they do depend on on China being a production powerhouse. And now that it's in this crisis, it's buying less of the commodities they sell, and these commodities are cheap right now. Think about oil. So these are emerging markets that are being hit by this crisis. There are people who are suffering. The U.S. economy may not be, but it's stable and strong. Other countries in the world are starting to feel it.
I have a feeling that we're going to spend our night tonight in some shopping.
Yes, and hopefully not Chinese, but Italian this time.
It's not affecting the Italian market, Ayman.
But some Italians are manufacturing in China. They're moving there, so
you can't get away from it.
Yeah, okay. So just I will check it and I will let you know. I will send you an SMS. Thank you very much, gentlemen.